after launching of Gibraltar, I never went to an MBA. I thought that I made my MBA with this startup. Simplicity, focus, one single product, one single ICP, one single channel, one single market is the answer. Usually founders are better at keeping focus. The ones that actually succeed, that I know, they have focused in the beginning.
The scarcity of not having a lot of money bred a lot of focus for me at Viva Real. And that was an incredibly good lesson. And one of my investors used to say, hey, Brian, don't chase the bright, shiny lights. So you got to have head down and focus. It's great to have you. I'm glad you can make some time in Sao Paulo to chat with us a little bit about your journey. Been involved now in the internet for quite some time here, from those early days, the birth of the internet in Brazil. You participated in a couple of different ways. I'd love to chat. How are things going with you?
Very good. Very good. We are at a very nice moment for TOTVS. And obviously, being the CEO of the company, I am very glad for everything that we are doing here.
No, it's great. I'm excited to dig in a little bit more, your M&A experience and everything that you guys have built, because you built a gigantic company. But before we dig in, let's get a little backstory. Even before TOTVS links, let's go back in time a little bit. Life as an entrepreneur, you started a company back in the day, Gibraltar, if I'm not mistaken. And so tell us about what made you start that company, getting into tech, if you could give some color.
Sure. No, that's very nice. Look, when I was maybe 14, 15, people were starting to ask what I wanted to be when I grew up. I said that I wanted to be rich and rich fast. My first 10 years as a professional, they were almost entirely dedicated to trying to find this way. To cut these corners. And obviously to become an entrepreneur was one of these attempts to get rich fast. So I went to, specifically about Gibraltar, everything started much before 1999 when Gibraltar was actually launched. What happened was that I went to the US by the end of 1995, and I spent maybe 4 or 5 months there to learn English because I didn't speak English before. End of 95, beginning of 96 was exactly the moment where the first big internet companies were mushrooming in the US. Yahoo, eBay, Amazon, all these guys were starting to appear there. Even Google was not yet what it is. The search engine of the time was, if I'm not wrong, something like Alta Vista.
Alta Vista, Lycos. Yeah, those are the early.
Exactly.
Yeah.
It was these days. When I came back to Brazil, this was in my head that at some point maybe this thing would come to Brazil as well. So I was a marketing trainee at Unilever here, but I was always trying to keep up with what was happening. And back in 1999, by the end of 98, beginning of 99, I started to see 1 or 2, 3 things starting to happen in the web. And then I decided that I wanted to take my chances there. So I asked for a 30-day vacation at Unilever. I put a business plan to create a copycat of eBay. I thought that I was alone trying to do that. Unfortunately, it became clear once I launched it that there were others doing the same. 2 groups of Argentinians were doing this and creating Mercado Libre and Derremate.com. They were launched pretty much at the same time as I launched Gibraltar. So again, it was the creation, the launching of Gibraltar was tied to this, trying to find a way to get to where I wanted to be fast and trying to take advantage of not having a lot of risk. I was not married. I didn't have kids. So I was light. It was the right time to take my chances.
Yeah, going up the mountain with a lighter backpack is a lot easier, right? You bring the essentials and you can go a lot further that way. When you look at the scenario in Latin America back then and now, Is there any lesson from that time that you would carry with you today?
Yeah, I think so. I mean, first of all, the environment back then was really much simpler, much less sophisticated than it is today. I mean, the number of companies, number of investors, the understanding of what was a startup and what was involved there, metrics that you followed. On the other hand, it was much easier in the sense that this first batch of internet companies, they didn't care about revenues, about bottom lines. They only cared about registering users, generating traffic, and so on. So it was a very different type of scenario. But obviously, it taught a lot. I mean, just for me to say to you that I didn't, after launching of Gibraltar, I never went to an MBA, for example, because I thought that I learned and I made my MBA with this startup, for example.
Yeah, that's something I pretty much tell most people early in their career is if they wanted to get into business, they should go join an early stage startup. Join something that is high growth with, ambitious, with amazing entrepreneurs, because your growth is going to be accelerated much faster than sitting in a classroom and looking at case studies.
And not only that, obviously you do have this aspect of the applying practical things when you are working compared to when you are at school. But there is also as you said, in smaller companies, in startups, is that the scope of what you are being exposed to is very broad. I mean, I was 24, and if I was at Unilever as I was before, the scope was very narrow. Even if you are a trainee and you are in a terrific company, the scope is very narrow. You become a specialist very fast. And that's exactly the opposite of what I expected of myself. I always wanted to have a very broad scope and to learn a broader set of things. And to be an entrepreneur, one of the things that you learn very fast is exactly that.
Absolutely. And I mean, if you're joining an early stage company, particularly one with a lot of growth potential or that's maybe experiencing some early signs of traction, product market fit, and growth, the scope, you're going to be thrust into all these new things because the demands of the business grow so fast when you're, going from 10 to 50 people, or, like there's like all of a sudden you don't even have like a department doesn't exist. And then it's like, okay, go create this. Okay. We need to leverage, this and go figure it out. And I think that as a young person, inside a company that, if you show a lot of ambition and a lot of interest in taking things on and being proactive, like you'll be that person that the founder is like looking towards, because you just go and get things done and get your hands dirty and say, you don't want to say, this isn't in my job description. You want to say, what do we need to be, jobs to be done? And that will accelerate your growth and your learning so much faster.
Yeah. You are going to make a lot of mistakes, but you are going to feel that you are in an amusement park. You have these latitudes to do. Just remember the name of the.
Yes. Thank you.
It's the latitude. I mean, this is, at least for me, this was awesome.
And tell me about some of those mistakes at Derramate. I mean, we'll get into Lynx and TOTVS, which became much larger companies. But tell me about the early days. What were the lessons at Derramate that you learned and think back? I mean, you can't be too hard on yourself, because Marcos Galperin turned out to be basically the best entrepreneur to come out of Latin America in the last 2 decades. So it's kind of like losing to Federer in tennis, right? But tell us about some of the lessons there.
No, absolutely. I mean, Marcos is one in a billion, maybe. The biggest mistake, probably, and it's easy to say that looking backwards, was that what was felt to be a 100 meters sprint became an ultra marathon of 100 kilometers. And the guys that understood this faster obviously started to change the business faster and turned the burning rate much, much lower, which gave them oxygen for much, much longer. So I think that Mercado Libre did that before the remate and in an intensity greater than the remate. And this was the beginning of the end of the race. I mean, in the beginning, when everything was okay, before the crash of the Nasdaq, both were relatively at the same pace in raising money, in spending the money, and so on. But once the crash of the Nasdaq set in, probably Mercado Libre understood this faster and started to react faster. So it extended the time where it could continue to operate. And this started to help them to increase raising more money because the investors thought that this was already a better set than the competitor, for example. And at that time, people already thought that there wouldn't be space for 2, 3, or 5 guys. It was a time where the winner takes all approach was even stronger than it is today. So again, the guy that increasingly looked that was in adjusting the business started to gain a huge advantage. That's why I think that the remate lost.
How do you balance the kind of like burning urgency of execution in the early days with a long-term vision of running a marathon? Like what are the secret ingredients to be able to like manage that? Because it seems like those are key things to be successful.
Yeah, definitely they are. I would say to you that in general, the most important thing is for you to try as much as you can to understand what is the nature of the race that you are in. I mean, again, not everyone is in a 100-meter sprint. Not everyone is in a 100-kilometer ultramarathon. So it's very important that you actually understand what is the race that you are competing in. And this might look obvious, but it is not. Right now, we are in the middle, for example, of AI. And honestly, AI is not running in the same pace for every company. I mean, here at TOTVS, the pace is different from the pace that it is in a pure SaaS company, for example, or in an e-commerce company. So for you to understand exactly and to place yourself in the right pace, key for you to decide what is the burning rate and how long you should be able to sustain yourself.
Let's fast forward to Linx a little bit. You know, you entered into addressable markets beyond POS by launching efforts in retail fintech and profitability tracking. What made you want to expand the product lines for Linx? And do you think that every startup should be a multi-product company? When is the right time to expand your offering?
That's a very good question. And I think that it depends, obviously. So in the end, what is going to happen is that usually companies start with one single product because it's obviously simpler, it's easier for you to do that. And you try as much as you can to find a product and an addressable market that is sizable enough that you can keep running for quite a while. But eventually, all companies will have to expand and become multi-product. It's just a matter of when, not a matter of if, in my opinion. If you are successful at some point, even if it is the largest possible addressable market and it is global, at some point, the success itself will force you to expand. I mean, look at Google.
Yeah, I mean, Google being
Google.
A good example, right?
Exactly. Look at Google. So maybe the broadest that you can imagine for a single product, and it is not enough anymore. So the moment that you are going to expand is exactly the moment where you feel that this single product, this single market is not going to be enough for you to sustain what you want to deliver.
What's the risk of doing that too early? Just lack of focus? What are the signs that, like, do you exhaust your market first and then look for tangential opportunities? What do you think founders get right? Do you think that they're typically good at staying focused and executing on a single idea until they have critical mass? Or do you think that tangential focus of expanding earlier? Of course, each company is going to be different and each market's going to be different. But walk me through, if you had to develop a framework for that, what kind of framework would you build?
I would definitely say, at least looking into the examples that I know, usually founders are better at keeping focus. The ones that actually succeed, that I know, again, they have focused in the beginning, and maybe later they will at some point expand. And sometimes when they try to expand, they are not very good at that. And they need to be changed actually for new people, because not necessarily they are good at running more complex, more sophisticated structures. So again, I think that usually entrepreneurs are very good in the first initial stages of the business, where again, simplicity, focus, one single product, one single ICP, one single channel, one single market is the answer. When they have to expand that, it becomes increasingly more difficult, more sophisticated. The stakeholders involved are much, much more difficult to handle. And most of the times, entrepreneurs are not necessarily prepared for that.
Yeah, my reflection just as an entrepreneur is that the scarcity of not having a lot of money bred a lot of focus for me at Viva Real. And that was an incredibly good lesson. And you know, I think later on in my journey, as I had more access to capital, the access to capital gave me the illusion that I could do more. And then you end up doing a bunch of stuff and you don't execute well on the core thing. And you need to unlock core value in order for you to have a stepping stone to build the next thing. So I think generally my encouragement to founders, and it's so hard to do sometimes. Yeah. One of my investors used to say, "Hey, Brian, don't chase the bright, shiny lights." You know, so you got to have head down and focus. So I think that that's good advice. Let's dive deeper into TOTVS a little bit. Growth playbook there at TOTVS compare and differ from what you've applied in your previous roles.
Well, I think that here it's more similar to what I did at Lynx, and obviously less similar to what I did at the Remate or Gibraltar, for example, because here we do have a stronghold on the ERP, which is a product that generates a level of lock-in with the client. And by lock-in, I mean something good. I mean, it's something that relates to the broadness in scope of what you provide to the client, to the level of criticality of what you are doing for the client, that makes the product very, very important, and obviously at the same time very, very difficult to change from the client perspective. And having this stronghold allows you to develop a level of relationship, an intensity and deepness of relationship with the client, where you actually become what I call a trusted advisor for the client. And being on this spot of a trusted advisor allows you to dream about increasing your relevance inside these clients, to increase your take rate, to increase the share of wallet that you get from the technology expenditures of these clients, and sometimes even going beyond the technology wallet of the clients. So it is very, very good that we have this ability to look at our clients and see the very broad set of applications and tasks that we can help the clients to perform. All this obviously translates into a never expanding addressable market. And since we are very good at executing things, it actually translates into a constant pace of growth in revenues and therefore in profitability as well.
Yeah, we run the venture fund, right? We see a lot of different opportunities. And I mean, occasionally I'll get a pitch, we're building the new ERP. And my first comment is usually, boa sorte, cara. Because because it's, you know, it's so deeply rooted into the companies that the switching costs and the complexity and it's a very, very difficult thing. I mean, if you're going to do something, you have to maybe focus on a really specific niche or a sector, or so when I do give advice, you know, and I say, if you're really focused on doing this, the way to do it would be to have something that is more unattended or more particular, because the broader market, it's one of those markets that's very difficult.
Yeah. Yeah. It's well entrenched.
Yeah. Let's talk about M&A a little bit, because I know that you guys have acquired a lot of companies. How do you think startup founders need to, when they're exiting, what are the things that they should be thinking about? Let's think about the side of the entrepreneur real quick, and what's your advice, even if it's counter to your benefit as an acquirer. Maybe we can.
I have no problems giving this advice. Look, I think that first of all, Ryan, it relates to taking the opportunities that you have. It's not always that you are going to have a buyer ready to buy your company. It's not always that you are going to have the market allowing your company to be sold. And I see many, many, many times entrepreneurs in love with the company that they have, and they miss opportunities. Lots of times, these opportunities, they appear just once, not twice, and much less 3 or 4 times. So again, especially when we are talking about startups, if you feel that it is the opportunity, do the deal. If you are young, if it is the first opportunity that you have, you are going to have more. The fact that you have completed successfully one journey will make the second journey easier, faster, less risky. So do take the opportunity. That's the first advice. The second advice is for you to really understand what you want. Do you want to sell 100%? Do you want to sell a portion? If you don't have clarity of what you want, probably you are not going to be very successful in the process of selling the business. And maybe the third is for you, obviously, to choose well who is buying your company. If you want to have a legacy, if you really want to close this journey in a high note, it's very important for you to care about what happens to your company after you sold the company. If it is a successful company after, it's going to benefit you anyway, even if it is not something that will generate more money directly to you. But in terms of reputation, this will be significant.
Yeah, I feel like when founders, I get oftentimes a lot of calls. Founders say, hey, I'm thinking about selling, the business, and, I've got this potential acquirer. And the call typically turns into a therapy session where I ask, what do you want out of your life? So there's all these much kind of expansive questions that founders need to reflect on. Are you still super motivated? What does it look like, the relationship that you think would be like with the potential acquirer? How is your family situation? 10 questions on life and personal kind of preference and where you are. And then there's some tactical stuff that you need to work through in terms of earnout and that comes afterwards. But first you need to go into the psychology of where you are. Once you say, look at this makes sense. And then you go through the practical piece. I have a question very specific, because there's certain types of entrepreneurs that just really struggle inside a larger company. What would you say are the percentages of the acquisitions you've done where the founders stick around for more than 2 years?
More than 2 years, much less than 50%.
Yeah.
I don't have a precise number, but much, much less than 50%. Definitely.
Yeah. It's just a different environment, right? It's a different situation.
And not only is a different setup, but it is also that the entrepreneur, when he makes a lot of money, the way that he thinks about the opportunity cost changes as well. So
yes.
Even if you are compensated as a high executive, top executive, it's not going to compare exactly to what you did in maybe 4, 5, 6 years as an entrepreneur with the company that you sold. So it's an unjust comparison. But even if it is unjust, they do the comparison. And this most of the times, this is the reason for them to leave as well.
I know a few founders that had sold their company for a lot of money and they left millions of dollars on the table just because of that very reason that you just mentioned. So it's a great point. And then let's talk about the acquire. At Viva Real, we didn't, nearly acquire nearly as many companies as you guys. We bought maybe 4 or 5 companies. When you look at the most successful transactions that you've done, what were the key kind of pieces that you can look back and be like, I recognize this pattern that was a good transaction for everybody involved?
Well, first of all, it is for you to have the right incentive. I have never had any targets for doing deals. And I don't want anyone on my team to have, as an acquirer, to have a target to acquire someone. It's exactly the opposite. You have to wake up every day and think, why the hell am I going to buy this company? I mean, I already have a lot of problems, a lot of things, issues that I have to solve. Why am I going to buy something that I know less than I know about my own business? So if you are not adequately aligned in terms of the targets, it's not going to be very good. This is number one. Number two is to be very disciplined in terms of price, conditions that you are doing the deal. I mean, you can do the math and you are going to come up with something that makes sense. So stick to that. I mean, I at least in my case, I don't see acquisitions that are do or die. And usually they are not do or die. Usually acquisitions are for a piece of something that you want to do, but it's just a piece. It's not the entire puzzle. So remember that and be disciplined. I mean, if this one doesn't come to the price that is correct, simply pass. I mean, it is what it is. Maybe later it will come up again. Number three is for you to be very careful about the business due diligence. Lots of people think that due diligence means auditors and lawyers and so on. Obviously, it is part of the deal, but the most important due diligence is the business due diligence. And it's not done by auditors or lawyers. It is done by you and your team. I mean, for you to know who is the people that is on the company that you are targeting, what is the business model, who are the clients, what is the go-to-market, how does it work, unit economics, and so on. Very, very important. Maybe the last piece is for you not to try to be a hero, meaning that you shouldn't try to turn around things. I mean, especially in technology, if a company is not performing well, if a software company that I am used to buy is not profitable, is not growing, something like this, I mean, don't buy purely. If the founders, if the guys that are running the business do not know how to make this better, it's not going to be you that is going to know. So if you stick to some of these things, the probability of doing things right will increase a lot.
A ideia não é comprar problemas, no? Every company already has enough challenges, so
exactly.
You don't need to compound the challenge that any company already has.
Especially because it is asymmetric. You know about your company more than you know about the company that you intend to buy.
Can you think of any examples where you passed on a company and then you should have bought it? It seemed expensive. Have you ever seen that? That's more of a question from an investor. This morning, Julio Vasconcelos, who's, I don't know if you know Julio, he tagged me in a post. He interviewed Mike Krieger, the founder of Instagram.
Yep.
And he asked Mike about his, biggest mistakes in investing. And then he tagged 5 or 6 other active investors like me about your biggest mistakes. And my reflection this morning was that my biggest mistakes in investing are not the mistakes that I made when I bought into a company. They were errors of omission. Could have invested at a fairly good valuation at Rappi, Nubank, relatively early. And in my mind, I thought, I missed the opportunity because Nubank is worth 500 million. Like I'm an early stage investor. I shouldn't have. But the reality is it was destined for greatness. And so they were errors of omission rather than mistakes where I paid too much have you had experiences where you feel like No,
honestly not. And it's exactly for the reason that you mentioned in the beginning. I mean, our take on M&A is not the take of an investor.
A VC. Yeah.
It's not a VC. It's not even a private equity. I mean, we are a strategic buyer. So it's exactly the opposite, actually. I would say to you that for us, especially in the size that we are, it's much, much easier for us to buy someone that already crossed some thresholds than to try to enter very early.
Yeah.
For that, for example, a few years ago, we created our own corporate venture capital because it was exactly on this reasoning that for TOTVS, being complex and a strategic buyer that buys 100% of the companies, for us to buy a startup that is still very small, not necessarily the product market fit is well tested and so on, it makes no sense. So we wanted to create another arm, a separate arm, very independent, very autonomous. So today we have this corporate venture capital, and for them, probably they do have a couple of cases where they might feel that they regret not having invested earlier.
So the mentality is much different when you think of the M&A arm and you think of the CVC. There's the difference. That makes a lot of sense. Yeah, that makes a lot of sense. Let's talk about IPOs real quick. TOTVS has been on, publicly traded for almost 20 years. And what should founders think about? You've been a CFO, also IR CFO. Based on your experience in those CEO of a public company, is there any insight that you should share with founders should think about if they're thinking about going public?
Sure. No, I think that the most important thing is for you to be sure that your company is ready to be a listed company. To list a company is a huge responsibility, and you create a new stakeholder that you don't necessarily need in your company. So you better be sure that you are actually ready for that, and ready in all senses, especially in your mindset. Again, most of the times I hear, yesterday, for example, at night, I was participating in an event, and I was being questioned, and the question was related to, the problem of being listed. And I said, well, let me tell you, I disagree with that. I mean, it's not a problem. It is a problem if you have listed in the wrong moment, if you are not ready to be listed. For TOTVS, for example, it's not a problem. It's a solution. It has always been a solution. But TOTVS was ready and prepared itself fully to be a listed company, as Links did as well. But many, many companies, they are not ready. And that's a big mistake, in my opinion.
What do you think about the current environment for LatAm startups, Brazil and Latin America? Do you expect the pace to pick up again in terms of listing on either Brazilian or international stock exchanges?
Unfortunately, I don't think that in the short term, this will change much. I mean, interest rates, for example, in Brazil, as you know, are sky high. Money continues to flow from equities to fixed income exactly because of that. And so, unfortunately, I don't see a relevant change in this listing environment here in Brazil and in LatAm in general. Maybe along the year, if things start to improve a little, it will change. There might be obviously one or two exceptions. There is always the ability for someone that is highly successful to be an exception. But in a general sense, I don't see this change in the short term.
Let me ask you another question about AI, because you mentioned AI and you said AI is going to be different, for different companies, depending on what is the internal dialogue? Because you're a massive company. How do you squeeze the juice out of AI, given that you have this very complex business?
Sure. I think that first of all, you have to understand that AI, in our case at least, is going to apply in two different dimensions. One is the internal dimension, using AI, obviously, to gain efficiency, productivity, to speed up internal things in sales, in back office, in customer support, in implementation and customization, in coding, testing, and so on. And obviously, this moves in a specific pace and in a specific way, for example. But then you have obviously the intention of applying AI into our products that we sell to the clients. And in this case is a completely different scenario. Here is like any kind of product development that we have. Obviously, it might be different in terms of the scope, of the pace, and so on. But it enters actually into the regular frame of product development that we have.
What's next for TOTVS?
What's next is AI. Is to turn AI into something concrete to our clients. Is to help clients to make users into agents and to help them perform better, gain efficiency, productivity. That's what's next.
Awesome. Well, thank you for chatting with us. And it's not every day there's a multi-billion-dollar company built out of Brazil. It's great to hear a little bit more about your journey to leading TOTVS. And yeah, it's an exciting time to be, building and this AI, it's reminiscent of the internet in a lot of ways in terms of how it's reshaping business, and even the impact could even be potentially greater. So it's exciting to see how you'll embrace that. I think that large companies, they have one advantage and one disadvantage. They have the advantage, they have a lot of data and they have a lot of distribution. The disadvantage is the size and the speed. So I look forward to seeing how you navigate that.
Yeah, me too. Brian, very, very good to talk to you. It was a pleasure.
Thank you.